but I like the signal. We look back here in our charts, right? We get up all the way up here, away from the current session. So I put the chart on, and this is a quick way of grabbing some cash, right? Take that extreme, right? Works all the time, right? And it's a counter. It's a trend trade, right? But we coming into the open. You got a profit like this, you would have to take it off, right? Because we may get some buy-in coming in this morning, right? Into the market after the initial drop. So this is a way where you would actually book your profit here in this trade, right? So you make a quick $105 there. See that, guys? The reason of taking that trade was the simple setup. Come up, extreme. Well, if you're not watching the market, you won't know we came from here to here. All right. From here to here, 1.5. Let me have 1, 2, 3 standard deviation. From here to here, it's over 3 standard deviation move. Half, 1, 2, 3. We got 3 standard deviation move. All right. If you notice, the moves throughout the night was very anemic, right? All right. Because we get the initial drop at the open, and I make money toward the open. I didn't trade a lot because I was testing some other stuff, but I make the money in RTY. Right? Love trading RTY. Very predictable. Right? When I get it right. So this is what happened. Same exact trade. Look at the time I take this trade. When the market open up, I short. We get an open drive. Right? We got an open drive when the market opened at 6 o'clock on the stimulus news. But once I look at my setup, then I went back in after that and I take another one. And I got this. All right. I took this one here below the VWAP and I got this in the mouth. This is a wrinkle setup. All right. And I got it. I didn't like this choppiness. You see how it was going. I like the move like this, but all these moves were playable. Every one of these moves were playable, maybe excepting this one. But all these moves were playable. So once I see the pattern like this, all right, and we came back up here like we did here, never breaking the cloud, never breaking the cloud. I observe the pattern, I short, and I make $150 on 2 quick, and I'm done. But the magic of the trade was this: watching the 10-year versus the 30-year, the 10-year treasury. The 10-year treasury is trading here, and bonds is trading here now, up. But last night, the treasury was up here after 6 o'clock, around 6:15, 6:30. All right. And bonds were down here. So you have the yields was rising, and we get a swift sell off. Right? We get the swift sell off from the opening. We had this nice opening drive. The Dow was up like, I don't know, 200 plus points at the open yesterday. But I didn't follow it. I didn't trade the upside. I follow the same pattern, right? I follow the same pattern that was happening all week, right? So we got the open and then we got the drop. Open and drive, and we got the drop. Look, bam. 6:30, 6:15, got a drop. But once the yield start rising, people start worrying about inflation. But as if you look at my write-up, I indicated in order to trade this market effectively, you got to know what the bond market is doing. All right? If you're doing swing trading or you're doing options, or even if you're scalping, it dictates what's going to happen. They're rotating out of technology stocks and discretionary stocks and moving into energy and financials. All right? But that's the big picture analysis. If you notice here, the high was here, the mid is here, and the low was here. So we trade from all the way up here, 31,705, all the way to 31,287. See that width in the drop yesterday? Could make tons of money if you understand the big picture of how the yield play in the market. That's why I went short. I didn't want to trade the other guys that were, my system start hanging up. Volatility was so vicious. I couldn't get a trade off in the NASDAQ. I had to reboot a couple of times, you know. But that's it. That's all RTY trading.